Very nice to be with Vancouver Startup Week this year. Really excited to see everybody participating, even though we're in lockdown. You barely believe it. We're all digital. Great digital hub here in Vancouver, always has been, and I'm glad that we're all here having a super positive situation despite the restrictions. So I'm very happy that OKR Financial is presenting with us. Bhavik Chawan, he's a VP of Business Development. He'll be following on the discussion to explain how OKR helps companies get financing. And we'll be explaining today exactly what you need to do for SR&ED tax credits, why it is great for high-tech companies or any type of SME that is doing R&D in Canada, and about the program. So I'll start up myself. Basically, we're going to say who we are. We're going to talk about a non-dilutive funding overview. That's Stephanie's going to be presenting that. I'll be talking about SRED, what you need to do from the technical perspective and how to maximize return. And then basically then Bhavik will be presenting what is SRED financing and how you need to get that money. So basically we'll start about who we are. Myself, Pam Sauter, I'm the CEO and Principal in Technology Innovation. I have an MSc in Computer Science from years ago, before anybody actually did computer vision. So I'm an old dog in terms of that aspect, but I've finally the technology caught up in capabilities in that area. I've been working in SR&ED, intellectual property development and technology development, for over 25 years. Worked at Motorola a long time ago as a patent engineering manager, so I have deep perspective on how to really build a whole company to maximize your technology and really grow. Also was very heavily involved in Avigilon and their development of their IP portfolio that they sold to Motorola Solutions Group for $1.1 billion. I've also been an entrepreneur, so I've really got experience of all the pitfalls of what not to do and what positively to do, and how to take advantage of all of these SR&ED and other grants and tax credits that are available within Canada. So I'll let Stephanie follow up with her experience and background.
Yeah, thanks everyone for joining us. As you can see, everyone's getting used to the whole COVID reality of Zoom meetings, hop-in, etc. So we could use some technical hires, especially for web type things. So please join us tomorrow at our recruitment fair, and hopefully we'll be faster getting on all of our new presentations. So thanks for waiting. To give you a bit of background about myself, my name is Stephanie Gursky. I'm the CFO of Novellum Global, and I run our financial consulting practice. I started my career in engineering. I did a BEng and HBA, and then did my MSc in risk management and financial engineering. I'm a former investment banker from London, United Kingdom, as well as Los Angeles, and I got my start in Calgary. I've worked at a number of top banks, predominantly in restructuring, and I have done capital raising and M&A as well. I spent a lot of time helping everyone out in the European sovereign debt crisis. But while I was there, I realized that a lot of startups were really feeling the brunt of crises. And when I came back to Canada, I wanted to join forces with Pam to come up with a company and idea so that we could help startups and help them find their way in this whole financial services industry, and how to get through to their next funding rounds.
Thank you, Stephanie. So I'll tell you a little bit more about Novellum. Basically, with Stephanie's assistance, we're focusing on trying to help startups and other companies grow through all of the development process, through the development of tax credit programs, grants, intellectual property, and on Stephanie's side, financial consulting. We focus on the government grants here in Canada, as well as the tax credits, and we also do additional services based on our skill sets like IP development and patent development, which a lot of finance companies want to see for technology companies. Stephanie?
Yeah, well, I would say our bread and butter right now is SRED and grants consulting, but we are quickly expanding our financial consulting services as well. We are helping a number of startups right now deal with the COVID crisis, and we've started our new Startup Step Up program. So talk to me later to find out more about that. And we work with everyone from startups all the way to investors who we help with due diligence, doing funds, and help companies in many different ways with their corporate finance strategies.
So I guess we'll talk a little bit about non-dilutive funding as an overview, and Stephanie will follow up regarding that.
From the perspective of this presentation, we wanted to focus on government funding in terms of funding that is non-returnable, as in it's not loan funding. And the Canadian government does have tremendous amounts of loan funding programs as well, but the funding programs we're focusing on are SRED and grants. The government funding programs there's over 2,500 in Canada, and there's over $7 billion dollars in funding available federally, as well as $1 billion provincially, which are administered separately by the provinces. Last year, over $3 billion in R&D funding, which is SRED funding, was issued alone to over 20,000 companies. The government funding area is very interesting in Canada, which I'll explain in a moment, and it has some very specific linked opportunities to private financing, and there's a specific area called SRED debt or SRED financing that we're happy to have Bhavik here to tell you more about later.
So the types of programs and that are available, Stephanie?
Oh, I thought you were doing
okay.
that. Why don't you give us a bit of an overview of SRED, et cetera?
Okay, so tax credit programs are very interesting. There's over 2,500 programs within Canada. The bulk of those are grants, but the tax credit programs like SR&ED, which is Scientific Research and Experimental Development, or the Interactive Digital Media Tax Credits, they're tax credits based on a company's corporate T2 taxes that they have to file. This is written into the tax code of both the provinces as well as the federal government, and they basically have not modified that for more than 25 years. The funding is consistently available, and it's tied to any taxes that are owing or taxes that have been paid for the company. It's an interesting program because it never really goes away. It just gets modified over time. Sometimes they increase the rates, they decrease the rates, and depending on the provinces, they may actually eliminate some of the funding. For example, the SR&ED program, unfortunately, in Alberta was canceled as of the end of 2019. That being said, in BC alone, we have a tax credit program, provincial SRED, and it's still in good standing and still very active. So many companies have moved from Alberta to BC just to take advantage of that. So those are part of the tax code. They're very lucrative. For small companies like startups, you're typically are very small, early stage. You're going to be eligible for the 35% enhanced rate from federal and 10% provincially. And this comes back in the terms of active refunds for the most part, and it's really a nice bonus to a company, and it really is essential to your business operations. In terms of grants, they're typically operated by some of the larger organizations within the government. You'll find NRC grants, Can Export grants. The IRAP and MyTax programs are specifically for R&D. And Alberta Innovates and BC Innovates are the two regional ones that administer many of these programs. These are grants which are not necessarily going to be available. It's first come, first serve for many programs, as well as you have to meet all of the eligibility requirements. So ultimately, if you had to look at grants and tax credits, the tax credit's not going away. Grants, they're more variable. The sectors can be very interesting because they're basically tied to the government's economic plans, and particularly this year, they've changed focus dramatically. COVID, anything to do with COVID, PPE, etc., has been skyrocketed to the top. You'll see that there are calls for R&D in particular areas or new products in those areas, whether it's the development of new vaccines or maybe PPE, etc. But they're very specific to a particular sector. There's also green energy and green, I'd say clean energy, clean environment grants. There's agricultural grants. Now that we're sort of in a lockdown, there's again a refocusing of grants asking for companies to do things like doing more growing of non-GMO type, animal-based plant protein products. That's a new call. They have over $40 million specifically looking for that. So they change in terms of to meet the government's needs and requests for their economics and for Canadian sovereignty. Also, cybersecurity, anything to do with IT is typically always very important. There's also some specific grants pertaining to cleaning up the environment, whether it's clean water, clean soil, clean air. They're very focused, as well as a green energy. Those are the primary focuses of those grants. Many of the grants have to have partnerships with universities, but that's not a downside because you can use a university talent and expertise to augment your staff and also solve problems that maybe you don't have in-house staff to work with.
Great, so let's move on. So what I'd like to do is drill down on what exactly makes Canadian government funding programs different from other international funding programs. So I've highlighted tax credits in air quotes, and there's a reason for that. Typically, when you're looking at tax credits, it would simply be a credit taken off of the tax owing at the end of the year. Now, what's incredibly valuable and incredibly different about the Canadian SRED tax credit program is that it predominantly operates on a cashback basis. What that means is it takes a couple of months to get your SRED, and literally you will get cash back in the middle of your fiscal year that you can use until the end of the year. That is a massive, massive boon for cash flow management in companies. The other thing is it's non-repayable. It's not a loan. There are other Canadian government programs that are loans and they are repayable. And as Pam will get into later, those sometimes can reduce the amount of SRED tax credits you're eligible to get. So you need to look at those very carefully when you're coming up with your corporate financing plan. And there's also another very important aspect to SRED and grants in Canada. Seeing as the SRED program is a cashback program, it does leave you with a window between when you apply for SRED and when you receive SRED several months later. That can be anywhere from 2 months to, if you have an audit, even 6 to 9 months. So there is a significant gap. Now, this opens up a very unique opportunity, which SRED financing providers, who are private finance providers, have stepped in to provide. This is a form of private debt. And what it does is it gives you bridge financing from when you apply for SRED to when you receive the SRED. And this is incredibly, incredibly beneficial. In essence, if you apply to a SRED debt provider like OKR Financial or others, as soon as you are engaging a SRED consultant to help you apply for your SRED from the Canadian government, you can get a loan issued within as short as 10 days and at very attractive rates in terms of being able to have that cash flow available so that you don't have to go through an equity raise. Very, very valuable. This will allow you to increase your multiples by an incredible amount by delaying dilutive financing raises. So I'm so happy Bavic's here to get more into that, and you should definitely look at that later. There are over $100 million in funds available through various private SRED financiers in Canada.
So I think we'll talk about exactly what is this. The SR&ED tax credit is indeed a tax credit. It has two components to it. It's federal and provincial. It's available for Canadian-controlled private corporations as well as non-Canadian controlled private corporations, i.e. if you happen to be a subsidiary of a U.S. parent company. It covers any industry, any company size. Particularly, they like to see small, medium-sized enterprises, but you can have over 500 employees and still qualify. Depending on your size, you will get either cash back or investment tax credits. Federally, you can get 15% back or up to 35% enhanced rate. The 15% is for those companies that are over 500 employees or have taxable income in excess of $3 million. But most companies, it takes a long time to get to that stage. So there's many, many years where you can be getting up to 35% back federally in terms of potentially cash on an annual basis. Provincially, each province has their own program, with the exception of Alberta now, and you can basically get between up to 15% in some provinces. British Columbia's rate is 10%. BC is very attractive that way, and it's very straightforward. They're integrated with the federal form. We just prepare those forms together with the federal one, and there's no difference. You get it simultaneously. How this works is basically a company needs to track your expenses. And you're going to be doing that as a business anyways. You're going to be paying either employees or subcontractors to develop your product. And when you're doing so, basically, potentially those expenses that are for technical R&D development work would be eligible for the R&D tax credit. We have to have a technical content to be eligible. There must be a technical staff that is used to develop the particular product that you're developing, and the work has to be done in Canada. Those three caveats are very, very important because the CRA reviews this, and they have technical people that look at the applications, and they are people themselves that have worked in industry in different fields, whether it's agriculture, sciences, or electrical engineering or software engineering, and they understand what is really technical development, which falls within the tax code. And when you engage a consulting firm like ours, we read the tax code all the time. We read through the adjudications that the government provides and their directions on what is eligible and is not. And we apply the same metrics to looking at your content when we're preparing the claim for you, so you can be guaranteed of getting your money back. Technical content typically is something that is challenging for somebody to do, but I'll talk about that a little bit later. Technical staff, qualified technical staff, means you should ideally hire somebody that has the right skills. Typically, the CRA does not like to see somebody that is just a hacker that develops the work. But having said that, I can successfully, on several occasions, have got very large claims for clients that were very, very technically savvy, better than the electrical engineers that were adjudicating them. And they actually were very higher than, I think, higher competence than many people at MSc program. So the key is really you have to have very eligible technical content, you have to have qualified technical staff, and the third thing is the work must be performed within Canada. You cannot subcontract somebody in India or the US or Europe to do the work. The work has to be performed in Canada. So those are the primary requirements. I would like to mention, though, that there is another very lucrative tax credit that is available in BC that's called the Interactive Digital Media Tax Credit. That replaces part of the SR&ED tax credit, depending on what the content is. And it's typically used for something like a video gaming company where you want to do the look and feel of a game and create the graphics, etc. But that's another available tax credit within British Columbia. That's at 17% return. So there's different tax credits that are available, and that's why you engage an SR&ED consultant, typically to look at what you're producing, talk to us about what you're producing, where you're doing it, etc. And we can advise you of what you should be applying for and what you qualify for. In terms of project eligibility, people often ask, well, what can I, is my project eligible? I'm writing a new app. Can I actually apply for SR&ED? Well, potentially, yes, you can. The tax code itself says it's eligible if it's a new product or a new process. But regardless of whether it's newer to you or not, it has to have some element of technical content that is challenging, and I'll talk to you about that a little bit later. You can improve an existing product or process. So if you have an existing app and you're adding a brand new interface to a brand new third-party system, and it's technically challenging to do that, potentially we can add a claim, prepare a claim for SR&ED on that. Proprietary extensions to using plugins or third-party SDKs, that definitely can be eligible for SRED claim. But the key really is, in all cases, it has to be technically challenging. It needs to have, again, that qualified technical staff. It has to be that in Canada. And it basically, the CRA will, if you're ever audited, ask for two other things to support all of your work. Documentation, and that can be in terms of source code, documents describing how it works, etc., and timesheets. So timesheets are critical, and that is for staff, as well as they've also asked for timesheets to support subcontractor invoices. So they want to link your expenses to the actual work, the time that it took people to do that work. And that's what we use to pull this claim together. Those typical metrics of subcontract invoices, T4s, time, and we look at the work that was done, and we come up with a way of figuring out whether your product or your process is eligible for the SR&ED tax credit. So people ask also, what are the expenditures? Well, this is a very nice thing about Canada. If you're applying for SR&ED, the biggest thing to apply for is T4 salaried employees. You get up to 64% back on your salaries that you've paid out. If you hire subcontractors to do that work, you can get up to 32% of their invoices. Again, they have to be within Canada. If you use any materials, and that means, like, suppose you're developing a new IoT device, and you're developing your own hardware, and you're actually preparing circuit boards, etc., and you do multiple prototypes, we can claim up to 40% of those, 42% of those materials, whether it's resistors, the custom CPU chips, etc., even the processes to actually fabricate it. If it's done within Canada and the work is pulled together within Canada, we can claim up to 42% of those materials. The nicest thing about this whole program within Canada, more so than any other country in the world, is this thing called a proxy. Within Canada, there's two methods of calculating an SR&ED claim. You can either add up every single little invoice and keep that in a shoebox, which would drive everybody nuts, and say I have $50,000 worth of invoices and materials and everything that I want to keep a claim on, and it covers my heat, my light, and everything. Or you could say I choose the proxy method, and the government will give you, for every dollar that you spend, eligible expenses under salaries, etc., for your salaried employees, they will give you a proxy of 55%. Now that is the best route to go. That is a bonus. So if you spend $100,000 in salary, they would say, actually, we're going to say you spent $155,000 worth of salary. That is the thing that is really beautiful about Canada. It's by all means within the world. There's other jurisdictions. They don't have that nice, generous proxy. And that is why our programs here in Canada are so lucrative. The US doesn't do that. It's a totally different calculation. So those are the typical expenditures. I'll go over and tell you a little bit about what's happened since COVID and how it's affected the SR&ED programs before I talk about a couple of case studies. Since COVID, everything was thrown upside down. The staff within the CRA was sent home. They couldn't work. So they had to come up with a new mechanism to actually deal with all of the taxes owing, etc. There have been several program changes where they have allowed the companies now to delay filing their T2 taxes for 2020 tax year end and the 2019 tax year end. So we can now file the T2s for their fiscal year end, December 31st, 2019, in December this year. So they've tried to accommodate everybody basically because their own staff couldn't work, and they didn't really go back to work until the end of May, beginning of June of this year. So they were at home with no cell phones, no computer access because they're worried about security, etc. So they've tried to adjust their whole program this year, and they've done a couple of other very interesting things, which are to all companies' benefit, especially startups. First of all, in the process, of filing, if you file your very first SR&ED claim, in the past, you have to do what they call a first-time claimant advisory service, where they would send out the CRA SRED division, a technical person, a financial person, and tell you about the program, and talk to you a little bit about what you built, etc. And then it would take several weeks to process your refund. They've eliminated that right now. They basically may phone you and say, did you actually do the work, now that they're back to work? But they don't come out any further. They're not doing any audits at this present time. And I've had clients literally this year, since June, get their refunds back within 2 to 6 weeks. So that's been their mandate, and that's been absolutely wonderful for everybody. So they've eliminated their FDCASs, and they've eliminated for this period of time their audits, any new audits. So they've been suspended. Unfortunately, one of the negatives is that if you have received the CEWS or applied for the CEWS subsidy for your employees, it's a bit of a clawback in terms of your SRED claim, but you just need to know that you've done that and tell your SR&ED provider that you did apply for that, and we'll compute and figure out how much that affects your claim. But I found for my clients in the past, it's very minimal in comparison to the overall claim. It might adjust up maybe about $20,000, but in the view of a larger claim, which is, you know, over maybe $100,000, that's minimal. So it's not a great negative. The other positive for you guys, there's no more payment by check, but that is also a negative. You have to remember to sign up for direct deposit directly with the CRA when you file your taxes. It is actually, if you don't sign up for direct deposit, I've had clients that have had their checks delayed for 9 months now. So please make sure that your CPA and you sign up for direct deposit if you proceed with a SRED filing. That's important, because then it'll get directly into your bank.
Yeah, that can be a mess if you don't do that. We've helped a lot of people find out where their SRED returns went. Definitely keep your SRED consultant fully informed, your accountant fully informed, yes, and sign up for direct deposit.
Yes, yes, and they don't have a very good tracking mechanism because nobody's there, so difficult. Okay, so, I'll move to the case studies. Do we have any questions right before we move up? I think.
Yeah, from Arjun Kumar, does IP expenses qualify for SRED?
Okay, intellectual property expenses. It depends on what you're developing. There's two components. The expenses to actually file a patent, no. But I guarantee if you're filing a patent, you've done some R&D. And basically that is independent of the expenses to file for that patent. So therefore your R&D expenses to get to the point of actually filing the patent, all that R&D work does probably qualify for SR&ED. Okay, because if you qualify for a patent and your IP lawyer says, I think you've got something here, guaranteed you probably have done R&D and you should be filing for claim. Hope that helps. So I'll move on to a couple of case studies. This is going to be very simplistic because I want to point out to companies why it's best to put people on staff, even if it's temporary staff, and it really comes down to your expenses. If you're a Canadian controlled private corporation, you're a small firm, you're just starting out, you've got maybe 5 or 6 people that you're employed, and everybody's in BC, but you've decided, well, I can't afford to hire full-time people. Maybe I think I should try to have subcontractors. Suppose you have $100K in your own T4 salaries, but you've paid $100K to subcontractors. Your total expenses are $200,000. On that, because of you'd only get a proxy of $55,000 against, pardon me, yes, $55,000 of that 100K would be allocated towards a proxy because it's only based on salary. Your expenses are $200K. The government says, oh, well, I'll only give you the $55,000 proxy on that 100K of T4 salaries. The only amount of federal ITCs, investment tax credits, which is going to be your SRED refund, is $74,000, $74,025. British Columbia is a smaller amount. they adjust it differently. You get $23,500 for a total refund of $97,525. Okay, so that's at your. There's other conditions in there. The T2s have to be computed a different way, et cetera, adjusted based on various things, but you basically be getting about $97,000 back in refund. That's if you have some subcontractors that you've spent $100,000. You do the same thing, but you take those $100,000 of subcontractors and say that you are now going to put them on as salaried employees. You still have $200,000 worth of expenses, but the government says, oh, those are salaries now. I'll give you a proxy of 55% on the $200,000. So basically, they're increasing your proxy amount to $110,000. So they're adjudicating it differently, applying the metrics differently. Your federal amount that you refund back is going to be $97,650. Your BC is $31,000 for a total refund of $128,650. So it really, even if the subcontractor is put on temporarily for that 1 year, if you have to bring them on, it makes much more sense for you to actually not use subcontractors, but use people within Canada, even if they're short-term employees, so you can maximize your claim. Are there any other questions at that point?
Not at the moment.
Okay. So ultimately, when you're maximizing it by doing that, you're increasing your refund by approximately 32%. You know, you've gained another $31,125. So it really makes sense to put people on, even temporary employees, if they're within Canada, eligible to work, put them on payroll as much as possible, because it's to your benefit to get more back from the R&D tax credit. Okay. All right. So, Stephanie, did you want to talk a little bit about the risks and liabilities briefly?
Absolutely. Well, I think we can both chime in here. So there are a number of areas that corporations overlook when they are planning their structures and their financing, and then they don't maximize the SRED that they can get back. So one of the largest areas we find companies don't set themselves up in the best way is corporate structure. There's a difference between CCPC and non-CCPC. And also, if you have a holding company structure, for example, we encountered some clients who were all owned by a large private equity firm. There's a different rate that you're eligible for when you're applying for SRED.
Yes.
Why don't you get into that?
Gets it. If you have a company which really has a lot of holding companies, or is owned by trusts, and that there's a whole different level of refund rates and eligibility returns, and it really reduces your rate down to the 15%. It's difficult also. Typically, you don't necessarily get a cash refund, but you'll be getting investment tax credits. Not to say that investment tax credits are bad, especially if you're a huge company. They're actually very good, because you could use that to reduce your taxes. But on a smaller scale for companies, if you're just starting out, it's very common for companies to say, hey, okay, I've got myself and my two other partners. We've decided that we're going to just take management fees, and we're going to have a shareholder loan that we've put in, and we've got a few other people that are giving us money to fund us. But what they don't realize, that if they're paying themselves management fees, or they have their own companies that they're using, billing their own services to that third company, that you're not going to be able to claim that. You can't claim a shareholder loan. You can't claim management fees. You need to pay yourself some sort of T4 salary to claim it, and that you need to repay your shareholder loan for other purposes. That's a loan to the company. You can repay shareholder loan for maybe reimbursable expenses, or you can't have it every possible way. You have to engage both your CPA and a SRED specialist to look at your structure and tell you what's the best way to get the most out of the money of the government.
And one thing I wanted to mention with the shareholder loans is that if you are growing and you're slightly larger, if you don't convert shareholder loan to shareholders equity, that impacts the ability of a SRED financing firm to collect. So we've encountered people who've become ineligible for SRED financing because they had an unresolved shareholder loan on their books as they were getting larger. So very important to convert that at exactly the right time to manage that properly and to manage when you're paying T4 salary or not, and also manage how your investors are coming in and how you're structuring that to ensure that you're really maximizing your cash flow and what you can get back via government funding.
The other thing is previous tax liabilities. I've had many companies say, hey, you know, what am I expected to get for my refund? And then at the end they said, well, I never got any money back. Well, what they didn't disclose to us, and their CPA forgot to disclose to us, was that, hey, they haven't paid their back taxes. Well, those are taxes owing. You need to work with your CPA to make sure that you tell your SRED consultant exactly what are those taxes owing, because you can get part of it back in cash, you can get part of it used to pay back taxes, but you have to pay those taxes, and the government will take what you thought was going to be cash to pay previous tax liabilities for the company. So that's really critical to be very upfront with your CPA, with yourself, with your SRED consultant, and understand yourself about what's happening on that front.
At the most important venue there is if you decide to go for SRED financing, that is, you're locked into repaying a loan of bridge financing when you receive that SRED return. So it's a very nasty surprise for yourself and any providers if you're unaware of some previous tax liabilities that the CRA will auto garnish. And they don't even put that on often the notices of assessment. You'll think you're going to get the full amount back, and all of a sudden a different amount of money turns up in your bank account and you say, what happened? I have to pay everyone. So that can be a very disastrous situation. You need to be very on top of that with your CPAs, with your SRED consultants, with even SRED financiers. If you're approaching them, you have to uncover all of your prior tax liabilities and make sure they are paid off, or you could get yourself into, frankly, a disastrous scenario.
Yes, we've particularly with COVID, we've encountered some clients too that thinking they're going to get this refund back and they're going to use that to keep on paying their employees, but they have forgot to pay their tax liabilities, and also that they have to pay their SR&ED consultants or maybe their CPA out of those proceeds also. Many of us on the SR&ED, it's very common to be a success fee. So we wait until you get your returns back, but we still have to be paid too. But that's not the major point. It's if you have a loan against you, it's any type of liability there that you have to be aware of.
Yeah.
I
was going to say, you need to know where that cash is going. And also with those liabilities, you also need to pay very close attention to what government aid you've taken during COVID. And it's very unfortunate that the government didn't really specify how that was going to impact SRED before people started taking emergency loans, CEWS, etc. And now people are finding, oh, oops, that's coming off of our SRED returns that we anticipated in cash flow. And then you're that much short to pay your providers or repay your loans or use that for cash flow in your company, etc. So keep on top of it going forward. Speak very closely with your financing providers, your CPA, and your SRED consultants, and really, really try and plan that going forward. These are incredibly advantageous programs. And they can help you tremendously with cash flow, but you have to be sure that there isn't something that's going to cause you to miscalculate and get you into trouble.
Right. Now, in terms of hiring and pay, again, as I said, try to hire people, even if it is on a short-term contracts. Basically, that is the best way to go to maximize it. There are grants too that help you with hiring people right now. They're very lucrative. They're trying to get people to work remotely, etc., especially the youth employment grants, etc., and also training. Training grants are very lucrative. Innovate BC's got a whole series of them. You can go through there and look what's available. There's a lot of money available at that point. We can give you some advice on how that can assist you and what the best way is to maximize that for you.
Pam, I think there's a couple questions. We have one question from Joanna. Will part-time salary count in the SRED calculation?
Yes, we just need to know how many hours a person works per year, and we have to put that in our model as we're developing it. If a person doesn't work full-time, as long as they are hired as a part-time employee and they get a T4 at the end of the year, or you issue them a T4, they're eligible. Yes, definitely.
And there's also another question from Daniel. Is there a ratio that says how much salary and how much materials or services you can claim?
Not a specific ratio. The government does have a percentage that you can claim, but it doesn't have a cap on it. So you have several $1 million in terms of materials that you're using. There's no cap. It's 42% of basically what the materials are. So there's no upper caps. Okay, so let's move on to this. So basically, I wanted to mention a couple of other things, and Stephanie can help along with this. To maximize your SRED, basically, we're trying to point out a couple of things. We say hire the right SRED consultant. And the reason we say that is we have found a lot of companies want to shop around for the best deal, the cheapest, whatever the case may be. But later on, they say, hey, the person didn't understand my technology. For us, the key point of this, and the government too, is they're relying on people to write up technical reports to explain to their advanced technical teams that are the SR&ED technical reviewers, the technical challenges. And if somebody's within your prepares your claim and writes the technical report and is an English major, and they're asked to write an IoT claim and describe what the challenges are regarding developing a new protocol extensions, they may not get the point. So the government is looking for people to help you write those reports in such a manner that meet all of the requirements, from explaining the technological challenges, why it is not normal, why it's not evident on the internet, what's really, really different. And you can't do it if you don't have the right person with the same set of skill sets. We're very fortunate in our firm. My background is quite broad in terms of computer vision, security, IoT, wireless, etc. Stephanie's is in chemical, green engineering, etc. So we have a broad skill set here that can help you with. Stephanie, you mentioned about the liabilities and eligibility.
Yeah, I mean, basically, we've already covered that. Just really, really understand your corporate structure, really, really work with your investors to figure out how you're going to structure that, especially around shareholder loans, etc. Uncover all your liabilities, absolutely key. Do not make the mistake of having an unexpected clawback from the CRA for unpaid back taxes. That's a killer. Make excellent hiring choices. Be sure to hire T4 salaries whenever you can.
Yeah, best if you can.
No subcontractors, and make sure everyone's in Canada.
Yes.
Otherwise, you're going to find out that all that development work you did somewhere else in the world is not money
eligible.
That you can reclaim.
Nope, that's pretty sad when people do that. Tracking. That's one thing. If the CRA does come and look at you, and that's one thing we really push, is you basically have to do project tracking. Good engineering or software development or any type of R&D development, hire people that know how to do that. Use timesheets. That's simple. People push back and say, I don't want to do timesheets. Well, I'm sorry. The CRA works on a dollar per hour basis for the R&D development. They may ask you to see that. It comes down to actually figuring that out. So they have to do time tracking. There's lots of stuff out there. A lot of it's free. It hooks into your existing system. Many of the systems that you get, Xero, QuickBooks, etc., they already have embedded time tracking. So use something like that. That's all we're asking for. Documentation is key. When you're doing software development, if you're doing anything in that field, please put in comments in your source code, please, and use a code management system, commit system. That's really key. And one thing I will ask for any software developers, please create a block diagram of your system. It really is helpful for everybody, and the CRA auditors often ask for it. So please do that. Again, Stephanie?
Yeah, absolutely. And don't forget, sign up for direct deposit. Sign up for direct deposit. Do not lose that check for 9 months. Let's let Bhavik take it away in a second.
Yeah, I think
there isn't much time left.
Yeah, a couple more quick questions. I think can do subcontractors from Canada? So do not what?
Oh, he's asking if subcontractors from Canada qualify or if they don't qualify.
Yes, subcontractors within Canada that are performing work for firms, they can be hired, but you can't hire a subcontractor from China to do work for a Canadian firm. We can't claim those invoices. Okay.
Let's let Bhavik go.
Okay, I'll just answer Daniel's question. How far back can I go if I started R&D already? You can go back 18 months from your fiscal year end.
Yes.
Okay.
Okay, so we'll start with OKR Financial. I'm really happy to have
All
that
right,
with you.
so we haven't got much time left, so I'll breeze through it. So quick bio on me, what makes me an expert. So I am a former managing director for the largest SRED and government grants consulting firm in Canada. That's why I'm a bit well versed. That's why I could answer some of the questions while Pam and Stephanie were presenting. So I have some of the answers there. I've helped companies raise money through government funding, through investors over the years. And I've worked for some of the largest corporations internationally as well. Next slide, please, Stephanie or Pam.
Yes.
So I'm just going to touch on OKR Financial and how I support the sort of the shredding government funds ecosystem. So we specialize in non-dilutive solutions where we provide SRED financing, grant financing, some asset loan, traditional asset financing, and we also have a venture fund that we launched in June that does equity investments. We can sort of combine all of this to help companies get more non-dilutive solutions so they don't have to give their company away too early, especially if you only need like $500,000 to get to your MVP stage. Why give away 50% of your company if you can utilize government programs and the SRED financing? The idea of the SRED financing is it's literally to help you fast track where you're trying to get if you've got immediate hires. Pam mentioned that during COVID, there have been claims that have been fast tracked where instead of taking the traditional 120 days or more, it's been 2 to 6 weeks. Recently, it's going back to the longer length of time again. The CRA's had a backlog. June typically is a big busy month, so they're now going back to the longer period. So we're sort of a stopgap to get some cash to do that. On the grant side, we have an interesting model which may benefit a lot of companies. If you're working with a consulting firm or even individually to get government grants, 90% of the programs are a dollar-to-dollar match, and many startups don't have the cash flow to match the program. So that everything on the other areas will qualify on the technical side, the personnel, but they just don't have the cash flow. I can provide, or OKR can provide, a letter of intent, which will say we would provide the matching funds and more when you get approved for this program. And this is actually accepted by all government programs. Say, okay, this is your cash. Love the technology. Have the cash in place. We will approve the grant. And many of the programs, they don't give you the cash up front. They'll approve it, but you have to spend the money on the monthly basis, provide invoices and reports of where the money was spent, and then they would reimburse you. So you have a lag in how quick the cash comes in from the government. So again, with our solutions with OKR, we can create that stopgap and help you with that. On the asset side, it's really simple. We have companies out there that get large purchase orders, or they have outstanding bills, 90-day turnarounds in the industry they're in. We can help finance that, again, providing solutions to non-dilutive capital to grow your business. Next slide, please, Pam. So with us, as Stephanie mentioned, it's about speed. We can process an application and provide funding within 10 business days. Our process is really simple. Well, you connect with someone on my team or myself. We go through the projects. You provide an application. You submit that with the support documents, and it could vary. Some of this information come from your SRED consultant or your accountant. We provide you terms for review. Once you agree with the terms, we provide legal docs, you sign, and we'll wire you the funds. The rates would vary depending on the program and what you would be financing, and it would vary anywhere from 1.3% to 2.4% monthly. But it's only a short-term fix, and in the long run, debt is cheaper than equity. So I always encourage startups, explore all the non-dilutive solutions as long as you can without giving your company away too early. Next slide, please, Pat. So that is it for me. As I said, quick and easy, just explaining exactly what OKR does. The whole purpose of this exercise today was to give an education more on the SRED program and touching on the government grants with Pam and Steph. But just to let you all know that there is a support network there beyond just the SRED to help you access cash quicker, grow your company quicker, and our motto is to scale, grow, and exit as quick as you can with OKR. And if you have any questions in regards to the program, please go visit Stephanie and Pam at their booth on the platform, and they can definitely accommodate all your questions to do anything with SRED grants, investors, equity, IP, patents. They've got a full shop of services there.
Thanks, Bhavik. Let's do a couple questions. I actually think there's one that's interesting from Joanna. Why should I finance my SRED if I have fundraised to support my runway already?
So you don't need to finance SRED, but it all comes down to where's the finance coming from. So if it's money coming from investors, are you giving up equity with that money? Then it's more beneficial to finance SRED. And how long is that burn rate going to last you? If you've only got enough money to last you 4 months, and then you've got to make another raise, is that enough? A lot of tech companies, their burn rate's typically high. They can be anywhere from 30,000 to 60,000 a month. So sometimes the SRED financing or the government financing solution here just gives you a bit more breathing room to get where you need to get to.
From my perspective, I'd say, well, you've already fundraised for your current runway, but that's going to help you avoid fundraising for a bit for your future runway. So that's going to increase your multiple by avoiding dilution for a little longer. And it's always good to have that extra cash on hand.